If we see that substantial, significant progress, I'm advocating that we move our policies tomorrow.
We go through soul-searching times like this and scrape the models, and yes, our conviction is as high.
They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the Early Edition on this Thursday, 20th of May. I'm Francine Lacqua in London, and here's what's coming up on today's program. A recipe for disaster. Cryptocurrencies remain under pressure after Elon Musk and the PBOC tank the entire asset class after a swathe of dip buying. Is there more room to fall? Open to taper, Fed minutes show a willingness from the U.S. Central Bank to discuss scaling back purchases in coming months, while U.S. futures point to narrow losses at the open. And brokering a ceasefire, reports suggest that Israel and Hamas may reach an agreement to cease hostilities tomorrow after heavy pressure from President Joe Biden. So first thing is first, crypto assets seeing a whipsaw session yesterday. I mean, it was really quite volatile, plunging by a third, then jumping higher by about the same amount. Bitcoin and Ether have seen the biggest declines this week after a slew of negative catalysts. First, Elon Musk complained about Bitcoin's fossil fuel usage. Then the People's Bank of China added fuel to the fire by reiterating that digital tokens cannot be used for payments. Well, let's get more with Bloomberg's Danny Berger. Danny, you've had a busy week. If you're invested in Bitcoin, you would have had a pretty exciting, if not terrifying week. Digging through the action from the last 24 hours, who's been selling and who's been buying?
I mean, in the words of Cathie Woods, Francine, it was outright capitulation. So I think it's fair to say that there was a pretty sizable mix of both retail and institutional. One key thing that shows it's kind of more towards the retail side, though, was the fact we didn't get a lot of contagion. So that's good news. It means that it's probably not people with maybe a very widely diversified portfolio. We also had a lot of the retail exchanges down. There is evidence, though, that the leveraged players probably got stopped out to some degree yesterday. So I have up here, it's basically how the VIX is calculated, but for Ethereum and Bitcoin. So Ether is in the blue here, and that one especially has these wild levels of implied volatility surging above 200. Bitcoin goes above 100. So this here would suggest that some of the more institutional players with a lot of leverage behind them probably fed into the downside. Now, in terms of who's buying, we got this big boost yesterday from sort of the likely suspects, people who are more or less talking their book and are the big Bitcoin bulls. We have Justin Sun, the CEO of BitTorrent, talking about on Twitter he's buying not just Bitcoin, he's buying Ether. Cathie Woods talking to Bloomberg saying that Bitcoin's still going to 500,000. And Elon Musk, Francine, of course, there is always an Elon Musk tweet when there's Bitcoin movement saying that Tesla has diamond hands.
Please tell me there's like at least one Elon Musk tweet and about 55 memes that go with it. But on a serious level, what's next? So there are some, are there key levels? Are there catalysts that we're looking out for?
Well, when it comes to the levels, this is something people always look out for in Bitcoin because it's not something that exactly trades based on fundamentals. This 200-day moving average is one that we've really been tracking a lot because it dipped below it yesterday. And the thought was, OK, because it's below this moving day average, it's going to go even further. Momentum's to the downside. Well, look, we hit 30,000 and it goes back up. So maybe this is the floor. We're back up above that moving day average now. In terms of other catalysts, I've heard from both bulls and bears on the Bitcoin space saying that this regulation fear is one that's going to continue to be with us, that maybe next we have concerns from the Biden administration. So it's something that's ever present, and especially we're reminded of it because of what China said the other day. But the hope here is that yesterday was just a bad day, not a turning point for Bitcoin, Francine.
Thank you so much. Our Danny Berger there looking at all the crypto moves. Now, in the height of yesterday's wild swings in crypto asset prices, we spoke to the perennial Bitcoin bull, Cathie Wood. The ARK investment chief executive says she still sees Bitcoin hitting her previously slated target of $500,000.
I think what's happening right now is because the stock market, the highly volatile part of the stock market, the innovation-oriented part of the stock market has gone through such a correction, which has been flamed by inflation fears. I think the correlations among volatile assets are going to one right now, and that's including Bitcoin.
So Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls, it can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic.
Well, that was the ARK Invest chief executive, Cathie Wood, speaking to Bloomberg's Carol Massar on why she still believes Bitcoin will reach $500,000. Now, today's Bloomberg Big Take focuses on tales from the fringe of the crypto craze, from Dogecoin and beyond. Coins and bizarre meme-based names have moved into the mainstream and even excited institutional investors. Well, joining me now is Charlie Wells, one of the reporters responsible for today's Big Take. Charlie, I know, first of all, congratulations on a fantastic story. It was a great read. I know a lot of people think that elements of cryptocurrency are a joke. Your story is about coin billionaires with a token that stands for Australian Safe Shepherd. What's going on here?
All right, so I'm going to have to watch my language in this interview because we were reporting from, as you said, the fringes of the cryptocurrency world, where some of these new coin names have, quite vulgar names. And basically, we were picking up on this sort of new phase in the crypto and retail trading movement. So we've seen the swings into Robinhood. We've seen the sort of GameStops. We've seen the rise of Bitcoin, and we've seen the rise and fall of Dogecoin. And a lot of retail traders are now starting to feel like this entire thing is a joke. And they're starting to not necessarily do research, look at coins that can generate sort of that FOMO feeling on social media, regardless of underlying fundamentals. And they're self-aware of how crazy this all is. And so we were picking up on that shift that seems to be taking off, especially after yesterday when you saw these seemingly inexplicable rises and falls in the price of Bitcoin.
Yeah, and Charlie, as you say, we have to watch our language because some of these coins are actually, they're kind of funny, right? We can't say it on air, but some of them are funny because of the acronyms. Now, you also talk about decentralized finance. What is it, this world you're describing?
Yeah, so it's really interesting. So, a lot of us, talk about Bitcoin, we talk about Ethereum as this sort of decentralized world. This world of decentralized finance, or DeFi, as it is referred to in the world, is even more decentralized. So it's people at home who are literally using a few $1,000s, some lines of code to create these smaller, sort of kookier coins, and they don't necessarily need to even persuade these centralized exchanges that we hear a lot about, like Coinbase or Binance, in order to list their coins and have people buy them. And then, of course, there is this part of the promotion, where in this world of decentralized finance, getting influencers to try to create that fear of missing out that I was talking about is a really important part of the model.
Charlie, thanks so much. Charlie Wells there, one of the reporters responsible for today's Big Take, and you can find it on our website or on the terminal as well. I've also pushed it out on social media. Now, coming up, the Bitcoin pullback wipes out 700,000 accounts holding more than $8 billion of assets. Is there more to come from the crypto drawdown? We'll have more on that. Plus, Fed minutes show an openness to taper talk at upcoming meetings. We'll discuss the outlook with Bruin Dolphins' Janet Mooney. That's coming up next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News with Leanne Gerrans. Hi, Leanne.
Hi, Francine. There are reports that Israel and Hamas are nearing a possible ceasefire. The New York Times says the fighting could stop within 2 days. The Wall Street Journal says potentially tomorrow. It comes amid increasing pressure from the U.S. to de-escalate the conflict. So far, 219 Palestinians have died and 12 Israelis. With Nord Stream 2 90% complete, the U.S. thinks stopping the gas pipeline is a long shot. In a report to Congress, the State Department says the link between Russia and Germany is sanctionable under U.S. law, but that the White House would waive the penalties for national security reasons. An official says the president wants to avoid a confrontation with Germany over the project. Here in the UK, Prime Minister Boris Johnson says he's increasingly confident that vaccines are working against all coronavirus variants. It's raising hopes that the last lockdown rules will be lifted as planned next month. The spread of new mutations of the virus had sparked concerns that the government would be forced to delay its plans. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Bitcoin and Ether remain under pressure after a bruising U.S. session that left much of the cryptocurrency community in shock. On top of negative comments from longtime proponent Elon Musk, the PBOC added to negative sentiment. And yet, that still may not explain the rout that took place on Wednesday. Many were buying virtual currencies on leverage, which leaves them vulnerable to sharp drops in the market. Now, in the past 24 hours, more than 700,000 traders have had their accounts liquidated, equal to more than $8 billion of crypto. Well, joining us this morning to talk about the markets, but first, actually, to start with crypto, is Janet Moy, Investment Director at Brewin Dolphin. Janet, as always, thank you so much for joining us. We need to talk about the Fed, about tapering inflation, but first, what exactly is happening to crypto, and what does it mean for what you're telling clients?
Yes, hi, good morning, Francine. Thanks for having me. Well, the only thing that is certain about crypto is that it is highly volatile. What we've seen in the past days is that there has been a slump and then a subsequent rally, and it is just all over the place. Definitely roller coaster ride for investors. As an asset class, I think it is too volatile and too risky for our clients. So our view has been that we are not dealing with for clients on cryptocurrency. I think that, companies are focusing a lot on ESG aspects, especially on the climate change, on the impact of the environment. So the point that Elon Musk made about the environmental impact on from Bitcoin mining is definitely something to think about for these large corporates, because a very key argument for Bitcoin going mainstream is that there will be lots of corporate adoption into the balance sheet for Bitcoin. But thinking about how actually corporates care about ESG and the environment, I think it is an argument against actually having Bitcoin in the balance sheet. So I think with more regulation potentially coming, more scrutiny on the Bitcoin, I think the asset will continue to be very volatile and risky for many investors.
Janet, what do you think becomes, what happens to Bitcoin? Is there going to be something else at some point that will be regulated and stable? Or do you think actually Bitcoin could evolve to become that cryptocurrency?
Yeah, I think it will take a very long time for that to evolve. Well, basically, the thing is Bitcoin or crypto, it doesn't really have a real use in the real economy. You can't use it to buy a sandwich in the shop. You can't actually spend it very freely like a fiat currency. So until we see that, it is unlikely to become a mainstream investment. But I think for some investors that have the appetite for volatility and the perception that Bitcoin can actually generate high return because of its limited supply and the excitement that it is new blockchain technology out there, I think there would be a place for some investors that have high risk appetite. But to the point where Bitcoin is going to be a mainstream asset or being used as a fiat currency, like what we do every day, it is likely to take a very long time.
Janet, thank you so much. Janet Moy there from Brewin Dolphin stays with us, and we'll talk about other asset classes, including stocks and bonds and the things that have been around for a long time. Coming up, open to talking about tapering at some point. Well, Fed minutes give the markets plenty to think about, but stocks have no direction. More on that next, and this is Bloomberg.
It was a surprise to hear the talk about Fed tapering. I think that that is something that is a debate that won't play out over 1 month, but the market had been thinking there might be a couple of months before you really saw this particular issue come into focus.
From a Fed's perspective, keeping the emergency measures in terms of the policy, I think, will be less warranted as the growth comes back. And hence the point that they are thinking about talking about tapering. It's not tapering as yet. I think will come to the front. I don't expect that to be a June FOMC outcome, but something that will happen between July to September.
We're going to continue to see this debate around inflation. You're going to get volatility throughout the summer, and we're going to be guessing about the Fed minutes and the specific meaning of those words for the next several months.
Well, some reaction there from the Fed minutes and the possibility of tapering to come. Now, still with us, Janet Moy from Bruin Dolphin. Janet, so it was the first time that they were thinking about tapering. The markets aren't really moving on the back of it because there are nuances like who voted for that, and it could be people that we were expecting. But what's your take on inflation right now? Is there a danger that the market will be surprised and that actually tapering will happen sooner than they expect?
First of all, on inflation, we think that digesting the latest US CPI figure, there is a lot of components that is driving that, and that is transitory in nature, in our opinion. For example, you see that the categories related to the reopening of the economy, like the transport prices, like the hotel prices, and there are also categories related to the supply shortages, to semiconductors, such as used car sales. They are the biggest drivers of that month-on-month increase in the core CPI. So it does suggest to us that there are transitory factors in that inflation report. And as such, we believe that the high inflation print will probably peak in May, and then it will gradually moderate towards 3% by the end of the year and towards 2% by the end of 2022. So again, transitory is a vague concept. We don't know whether the Fed means 3, 6 months, or a year. So, but to us, we think that we are going to see peak inflation in the very near term, and we think that markets they have actually digested a lot of that inflation concern news, and I think they're more and more thinking about the Fed should actually think about the tapering in the coming future. I think the biggest risk out there is that the Fed let the economy run too hot, and they ignore that aspect, and they keep policy very, very accommodative. Continue to buy 120 billion of bonds per month, and that is a scary bit that inflation could turn actually more persistent than thought. So I think the fact that the Fed is thinking about talking about it in the coming months or in the future is actually a good thing for markets.
Janet, I mean, it kind of reminds me, we were thinking about getting a puppy and didn't come for a long time, and then suddenly it was there. But that's another matter. Janet, when you look at, commodities, which is one of the asset classes or one of the industries that we've been looking at very closely, I mean, are we underestimating or overestimating actually the power and growth in China?
Yeah, so I think the growth in China is very robust still. Well, consensus expectation is that it is going to grow at 8% this year. I think it's more the change in tone of the monetary policy that is in focus. Well, what we already saw in the data from the credit side of things that China is trying to slow down the pace of credit and as such, the pace of the economic activity. So as a result, I think a number of commodity prices, industrial commodity prices have actually retreated from their peak in recent weeks because they are starting to worry about what China may do about it. Because after all, China is the biggest commodity importer, especially on industrial commodities. So historically speaking, whenever you start to see a tightening in the Chinese credit impulse, then commodity prices should roll over. And I think we may be at that point in time where we see peak commodity prices as well.
Janet, thank you so much for all of your insight. Janet Moyther, investment director at Bruin Dolphin, joining us today. Now, coming up, Elon Musk reveals that he has Asperger's syndrome, but there's more mounting evidence of a lack of progress in tackling disability representation at multinational firms. We'll discuss that next with an important report out here in the UK. And then, of course, it's all about cryptocurrency. If you look at the day we will have, we do have a bit of data out of the US that may give us an indication, again, what the Fed is looking at. I'm also looking at oil. Now, oil is a story of two halves. One, of course, is the growth in China. The other one is in the Iran talks, the fact that they're in focus and that we could have some kind of deal. Treasury is pretty much steady, the dollar weakening. Again, cryptocurrencies, after a crazy week, or a crazy day yesterday, now stabilizing after this pretty volatile session. Yesterday, it rallied 30%, it was down 30%, so we'll look at new currencies as well. This is Bloomberg. A recipe for disaster. Cryptocurrencies remain under pressure after Elon Musk and the PBOC tank the entire asset class. After a swathe of dip buying, is there more room to fall? Open to taper, Fed minutes show a willingness from the U.S. central bank to discuss scaling back purchases in coming months. U.S. futures point to narrow losses at the open. And brokering a ceasefire, reports suggest that Israel and Hamas may reach an agreement to cease hostilities tomorrow after heavy pressure from President Joe Biden. Well, good morning, everyone. I'm Francine Lacqua here in London, and welcome to Bloomberg Surveillance, the early edition on this Thursday, the 20th of May. Now let's get straight to our top stories. And minutes from the Fed's last meeting showed that some officials were hinting at tapering to come. The minutes described an openness in upcoming meetings to begin discussing a plan on scaling back bond purchases. Well, let's get straight to our top market stories with our Danny Berger. Danny, what are you seeing?
Well, Francine, look, that sort of statement from the Fed, at least yesterday, was enough to nudge U.S. 10-year yields higher. It was a surprising statement to a lot of market observers because, they're not supposed to be thinking about tapering. But one of the really key elements, and I think it's kind of fading into today's trading session, is one, this of course came before those April jobs numbers, so does that change anything? And two, we don't know exactly who said this, which are the officials who think that this could be a topic of debate at upcoming sessions. So let's switch up the boards, look at what's happening so far this morning, and we are seeing somewhat steady yields. We're not getting more of those rising yields. In fact, it's lower by about 1 basis point when it comes to the 10-year yields. But key here is that U.S. break-evens are below that 2.5% level. That from the Fed was really enough and is still enough this morning to put some of those inflationary bets lower, to see less inflation for the next 10 years. Now, when it comes to equity markets, maybe bond markets were playing along, concentrating on what the Fed was saying, but equities seem to kind of be enthralled by what's going on in Bitcoin. There are a lot of people yesterday who were saying, okay, people are going to be pulling their money out of Bitcoin and putting that to work in the equity market. So I think that distraction, maybe to some degree, is still going on today because we're seeing Bitcoin rebound. So that's about 3.6% higher. It's still below 40,000, though, Fran. It's been waffling around that key target so far this morning. But let's look at the U.S. pre-market movers, because when it comes to the U.S. session, when it opens in a few hours, it's going to be those crypto stocks we have to watch, be it Marathon, be it Riot. So those are up nearly 2%. But look at Coinbase. Coinbase isn't even up 1%, despite the fact that we are seeing the whole entirety crypto space move higher. I think this is probably a nervous thing to look at if you are an investor in Coinbase, that it can't successfully rally with the rest of them. Francine, Coinbase, of course, yesterday having some of those outage issues when there was all the hype and trading around Bitcoin.
Danny, thank you so much. We'll definitely be watching crypto stocks very closely. And in the meantime, we'll be talking about cryptocurrencies a lot. Now, it was 2 weeks ago that Elon Musk revealed that he has Asperger's syndrome while appearing on U.S. national TV. It is thought to be the first time that the Tesla chief executive has spoken openly about his being on the autism spectrum. Now, people with Asperger's often focus obsessively on a complex topic and have trouble with social relationships. The very fact that Musk's revelation may be considered groundbreaking in the business world could also mean that disability still remains a difficult topic in a corporate culture. Now, the Valuable 500 is a global disability network that consists of business leaders from 500 of the world's biggest companies, which have agreed to publish quarterly reports into disability representation. It launched at Davos in 2019, and it represents firms with a total annual revenues of more than $8 trillion across 36 countries. Its objective to tackle the, quote, shocking state of disability representation in business. Well, joining us now is Caroline Casey, the founder of the Valuable 500. Caroline, thank you so much for joining us. I actually remember that interview in Davos 2 years ago when you launched it. You've had immense progress. What has been, though, the most frustrating thing about this? We're coming from a very low base. How much progress have we actually done during the pandemic?
Well, I think the pandemic, well, first of all, thank you for having me back. It's wonderful to be here and having announced this critical, it's the biggest business move on disability inclusion ever. Look, the pandemic, I think, has done, it has exploded or really shown us the gross inequity and inequality in our world. But one thing it also has done, it has shown us that a business system can flex and it can change when the intention is there. And what we have seen is, for a lot of reasons before the pandemic, there were so many reasons that disability was excluded because for people to maybe get into work, it was too hard or it was too costly. And the whole world has worked remotely. And I think this is the greatest opportunity we have right now. And when we're looking at growing out of this and looking at our recovery, if you think about the spending power of the global disability market, which, because we have 1.3 billion people with a mother and a father, that's 70% of our global economy, that is 13 trillion. So I think this pandemic has given us two things. It shows us the system can flex and change if it wants to, and it shows that there is a huge need for us to be engaging with this consumer base as we have inclusive growth. And at the moment, you said it yourself, we have 500 of the world's biggest companies. And what makes this so exciting for us, this was not a pledge or a tick box exercise. What we're doing is we're announcing phase two to activate this community, to improve the state of disability inclusion in business. We've 13 global iconic leader companies. And let me just give you the scale of this, right? We're talking about companies like Sony and Mahindra and Google and Apple and Deloitte and EY. This is big companies committing, their CEOs and their businesses committing to really exploring how do we serve our consumers with disability? How do we report on disability? Do we even know how many people with disabilities are working in our businesses? Do we, as the leaders of our business, speak about this? And that's why Elon Musk speaking was so important.
Yeah, but I was going to ask you, first of all, do we have the numbers of how many employees have disabilities at these big companies? And do you actually need to put some kind of targets to make sure that it goes quickly enough instead of it just being, you can have the best goodwill in the world, but then if this wanes, then it will be only a tick box exercise.
Absolutely. Listen, we have to look at how we report on disability performance internally in our companies. And also, can I say, we need to have disability metrics in business performance tools, because if we don't measure things, it doesn't get done. Now, we commissioned a piece of research with Tortoise, and there's some shocking stats here, that we have in our FTSE 100 companies, we do not have any leader or senior executive or board member who discloses having a disability. And that's why Elon Musk's story is such a big deal. I have a disability I didn't disclose. I understand why we don't. But if we don't see it, we can't be it. The second one is only 12% of our FTSE 100 companies are reporting on disability representation. Now, we estimate, and we know most likely, that our companies have anything between 15 to 18% of their employee base have a lived experience of disability. 80% of disability is invisible. But the legislation protects people like me not to disclose. But I'm challenging us going, well, why are we creating cultures where people should have to hide? Why do we know that 7% of our C-suite have a lived experience of disability, but 4 out of 5 of them are not disclosing it, like Elon Musk just did or Richard Branson just did? Because if the leader is willing to disclose it, then individuals will, and then we can serve people with disabilities, and we can ensure they get jobs that are meaningful and they can be retained and have careers within companies. So if we're not talking about it, if we're not reporting about it, and it's not enough to say, well, this is too difficult. And that's why I think the Valuable 500 is so important. We've got to hack solutions together. We've got to find a way to solve this problem, not just navel gaze the problem.
So, Caroline, so when you speak to chief executives, and maybe the chief executives that actually have signed up to this, what do they say is their biggest barrier? Is it actually, if they employ someone, that then they make sure that the environment is safe and that they progress, or is it actually hiring people with disabilities, or is it measuring?
There's two things that I would say. Still the fear of not doing enough. Still the fear of getting it wrong. Hence the importance of us having this collective community where we can share best practice and innovate together. It genuinely is fear still. But the second one that I think is I genuinely do not believe business understands the extraordinary return on investment and the need to future-proof your business. Disability is going to touch every one of our lives. And if you look at how this pandemic touched us, we know that's to be true. Can I just say, isn't it extraordinary? This shows how little we understand. 1 in 3 of our FTSE 100 companies' websites are not accessible. Today is Global Accessibility Awareness Day. How on earth are you going to be able to access, in the UK alone, that 13 million people with disabilities representing 249 billion in revenue if your website's not accessible? We do business online. So that's, I believe, chief executives still are only learning about the extraordinary business opportunity, insight and innovation we have to offer.
Kailey, I mean, you use the word, the label, actually disability. Do we need to get away with that, or does it not really make a difference? I know, for example, for autism, they use the word neurodiversity. Does it actually make a difference for companies? Does it make a difference for you?
Well, I tell you what, the word disability is a little word that covers so much. And I have to say it's the intention behind the word. There's a sense of real hope when you see that younger generation talking about disability pride. It's the intention behind it. We are not defined by our disability. I have a disability. It's part of who I am. And it does not define how I exist and live in the world. So I really believe we need to get on with looking at the skills and capabilities and the opportunities that people have, every one of us, and the innovation and insight we bring. And the language, yes, needs to be discussed, but it's intention behind it. You cannot whitewash this language. I have a disability. I'm proud of it. And like Elon Musk would say, it's his superpower. Look how he got to where he got to.
Caroline, thank you so much for a wonderful conversation on an important topic. Caroline Casey, they're the founder of the Valuable 500. Now, coming up, reports suggest that Israel and Hamas are moving closer towards a possible ceasefire in coming days after pressure from the U.S. We'll get more on that shortly. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. EasyJet is expecting a summer of gradually recovering demand for travel and now sees only about 15% of its pre-virus capacity in the current quarter. It previously expected 20%. For the first 3 months of the year, the discount carrier reported a loss of £700 million.
There's still very limited visibility beyond, the Q3 that we are in. We only expect to fly around 15%, as an example, of 2019 capacity in Q3. But the trend is definitely there, and we know that there's a huge pent-up demand for people to travel. So it's all now down to the restrictions being unwinded.
Now, Chinese tech giant Tencent is reporting a 25% gain in quarterly revenue. China's largest firm has sustained a boom in gaming and the cloud that began during the pandemic. Prosus, the unit of Naspers, which owns around 30% of Tencent, is higher this morning. Vegan food and drink maker Oatly Group has priced its IPO at the top of a marketed range, raising more than $1.4 billion. The offering underscores plant-based products jump into the mainstream as consumers do seek alternatives to traditional meat and dairy products. The listing gives Swedish Oatly a market value of about $10 billion. In the past few minutes, we have heard that the organisers of the Shangri-La Dialogue have cancelled the event in Singapore due to a rise in virus cases. US Secretary of Defence Lord Austin was expected to be among those attending the event, which focuses on global defence and security issues. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, there are reports that Israel and Hamas are nearing a possible ceasefire. The New York Times says the fighting could stop within 2 days. The Wall Street Journal says potentially tomorrow. It comes amid increasing pressure from the U.S. to de-escalate the conflict. So far, 219 Palestinians and 12 Israelis have died. Well, joining us to discuss all of this is our international government executive editor, Roz Matheson. Roz, always important and great to speak to you on this topic. How realistic, first of all, is it, is Biden's path to a ceasefire?
Well, it does seem we are certainly heading that way. There's been chatter about this for a number of days now, even before the last phone call yesterday between the US president and the Israeli prime minister. And that's, of course, despite the continued violence that we're seeing today, Israeli airstrikes hitting homes and weapons warehouses and so on in the Gaza Strip. And also there were some rocket attacks that have come from the Gaza side. It seems to be moving very much towards the idea of getting a ceasefire that would be mediated largely by the Egyptians, who can talk, of course, with Hamas, because the US will not, because they are designated a terrorist outfit. It seems that perhaps what we're seeing is that last kind of effort to achieve their desired results, particularly for the Israeli prime minister, who has said he wants to degrade Hamas, and he needs to also to be seen to be doing this on his own terms. So we are headed in the right direction, it seems. He'll say perhaps tomorrow that he's achieved what he set out to do with the Israeli airstrikes, and he's now ready to de-escalate. So the noises on that front, at least today, remain positive.
And Roz, this is what you were saying yesterday, and you just repeated. I mean, basically, the U.S. is relying a lot on regional powers to stop the conflict. Is there any insight, and I know this is a difficult question, that once we have a ceasefire that can actually hold?
Well, that is the big question. It may be actually simpler to get a ceasefire that holds rather than dealing, obviously, with the very deep-seated fundamental issues behind some of this, and particularly the communal violence that we've seen. We saw that flare again yesterday and extended to different areas, of course, where you see Arab and Jewish people living in close proximity. So the ceasefire itself might be the simple part, it turns out, because you can get Hamas and the Israeli military to agree to stop firing at each other. The bigger question is, how do you diffuse things on the ground in Israel? How do you get people to go back to their homes and stop the violence that we've seen on the streets? And if that violence does pick up again, then there's fresh pressure on the Israeli prime minister to resume his airstrikes on Gaza. So it's sort of a vicious circle there, but we need to see the first step being the ceasefire and the second step being a way to de-escalate on the ground.
Yeah, Roz, thank you so much. Always insightful. Bloomberg's international government executive editor there, Roz Matheson. Now, coming up, the crypto yo-yo. Well, Bitcoin loses 31% of its value in the morning before surging 33% in the afternoon. That was yesterday. So what's next for the virtual currency? The discussion is up shortly. This is Bloomberg.
We go through soul-searching times like this.
This is, an asset with very weak fundamentals that is going to be subject to a lot of volatility.
I mean, imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior. We need that in crypto.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
Our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change.
Some of the reactions there to yesterday's crypto roller coaster ride. Now, crypto assets saw a whipsaw session yesterday, plunging by a third, then jumping higher by about the same amount. Bitcoin and Ether have seen some of the biggest losses this week after a stream of negative news. Now, joining us is Bloomberg opinion columnist Marcus Ashworth. Marcus, I want to ask you about the Fed. I want to ask you about tapering, but I need to start with crypto. What exactly is going on?
Well, I think it was just the crisis of confidence that you have when you have such a small float in effect that there is. It's held by, we believe, and no one knows anything in this world. And that's what creates the mystery and both the fun and the misery is that there are some very large holders of crypto, and it's not a liquid market. Even the futures market isn't really practical for shorting because the margin requirements are so high. So it becomes this swell of a shoal of fish, which it's hard to predict. And I think that weirdly though, I'm looking at myself and maybe I'm the fool because we're all starting to really quite enjoy it yesterday when I saw all my chums in the market and everyone else, sort of reveling in this downfall of Bitcoin at last. Sanity has returned, and then, well, it hasn't. Sanity is not returned. The madhouse is still very much alive, and it lives to fight another day. So it's part of its shtick, I suppose, and that's what's we've got to see more of this, unfortunately.
Yeah. So, what exactly, Marcus? When you look at some of the, some of the things that what is it correlated to? So, what surprised me is that PBOC says, look, we won't accept, or China won't accept it as a cryptocurrency payment, but we kind of knew that. So, it doesn't really track inflation. Like, what does it track?
Zero, nothing. Human emotion. It's got no value in the world. It doesn't do anything. It's not practical. It is a bottle to put human emotions in and shake it up and down, and it's hugely exploitable, and we all fall for it. And unfortunately, we keep on giving it oxygen. So it's one of these sorts of things that we're a victim of our own creation here. And look, it's at some point somewhere there might be something that comes out of this, but the practical reality is, my chum Bill Blaine points out this morning, quantum computing at some point will be able to break and crack the codes of Bitcoin, and it will unravel of its own nature. But that's a while away still, and we're ruining the planet while we're trying to create it. But and everyone's having lots of fun and games with silly tweets and silly coins. But it's keeps us alive. It is directly a consequence of too much money, infinite money for finite assets, and people can create new and weird and wonderful things. So it's unregulated because it's a currency. It's not a security. And look, you play it at your own risk and have some fun. But grumpy old man, it's not for me.
All right. What does a grumpy old man tell me about what the Fed will do in terms of tapering?
Well, the grumpy old man is thinking, what is this stupid not talking about, getting ready to start talking about, maybe talking about tapering? Look, in a normal world, which clearly we're not in, the Fed would be tapering already, well down the track of it, but it had such a bad experience in 2013. But the Bank of Canada has tapered and got away with it. The Bank of England is sort of quite of maybe tapered, but it's just extended over a same time frame, the same amount of bonds it's going to buy, but it's reduced the pace. So why is the Fed so frightened of itself, of its own shadow? I think they just want to overdo it deliberately and get the markets, to very much get the U6, which is the underemployment rate, and the labour participation rate better, and then maybe they'll start tapering, and then at some point in the next century they may even raise rates.
Thank you so much, Marcus Ashworth there, never dull. Bloomberg Surveillance Early Edition continues. This is Bloomberg.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
They write about crypto because it's new, and they assume that the status quo is kind of the risk-free zone. It really isn't.
We go through soul-searching times like this and scrape the models, and yes, our conviction is as high.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kailey Leinz.
Well, good morning, everyone from London, Berlin, and New York. Our top stories today. Crypto craziness, a plunge in the morning, a rally in the afternoon. We'll look at what's likely to happen next for digital coins. Time for Taper Talk. Well, Fed officials signal they're willing to discuss scaling back their massive bond purchases. And the Semiconductor Summit, the White House looks for solutions to the chip shortage that has rocked supply chains around the world. There's quite a lot going on. I know we're really looking at cryptocurrency after the crazy day that we had yesterday. I've never really seen anything like it. And then, of course, Kailey, when you look at everything else that's in the markets, it's the chip shortage and exactly what we heard from the Fed.
Yeah, I feel like nothing characterizes yesterday better than the fact that Bitcoin got more attention than the Fed finally talking about tapering. It was a really wild session. Today, maybe as well. I guess we're going to have to stay tuned. Right now, 5 a.m. Eastern time, 4.5 hours to go until the U.S. Open. We'll see how the tone is because it was a bit mixed in Asia. You did have Chinese stocks ending the day higher, Japanese stocks as well. A little under performance from Taiwan stocks. And broadly, the materials sector in Asia is what underperformed. The MSCI Asia Pacific Materials Index was down a little more than 1%. And that had a lot to do with the fact that China is still trying to cool down the commodity rally. And indeed, we saw iron futures in Singapore down about 2.2%. As for what the picture looks like here in the U.S., yesterday we did see some dip buying coming in. Originally, losses were quite large. Even the NASDAQ 100 managed to end the day in positive territory. The other benchmarks down just fractionally. But today, in really just the last couple of minutes, we have seen futures rolling over. They were already down just fractionally, but now we're down about 20 points on S&P E-minis, or about 0.5%. In the bond market, of course, investors are trying to figure out what exactly the Fed is going to mean when that taper discussion is going to start, as some members of the FOMC are alluding to, or were alluding to in those minutes. Yields moved a lot higher on that yesterday. Today, they were coming in just about 2 basis points on the 10-year to 1.65%. It is a weaker dollar story this morning, though it is off of its lows. And then, of course, the whiplash continues for Bitcoin, all the way down to $30,000 at one point in yesterday's session, then back up to around $38,000 by yesterday's close. And we're just shy of $40,000 once again. So there is a rebound taking shape, Matt. My question is, how long does it last?
Yeah, or what caused this incredible drop and then recovery, Kailey? A little bit later, I'm going to show everybody a chart that may explain some of it. I will walk our radio listeners through the chart. Welcome to those tuned in on London DAB Digital Radio. Right now, I want to take a look at what's going on in European equity indexes. We had gains early on that have now dissipated to some extent. Spain is currently down. France and Germany are gaining. The UK and Portugal not doing a heck of a lot of anything, neither really is Italy. So a little bit of a mixed picture, let's say, here. I think the interesting thing really is the Fed beginning to talking about tapering. That's brought the dollar down against most other currencies, including the euro. Right now, holding right around 122, just under 122. And then there's a couple of smaller stocks, but really fascinating company stories. A newspaper is reporting that ST and Microelectronics might be evaluating a possible takeover offer for Nordic Semiconductor. As a result, those shares are jumping. If there were a percentage sign there, you would probably see about 8%. And then Trainline is getting clobbered. The UK has the oldest train network railway system in the world, and they're thinking about revamping the way ticket prices are put together, the way tickets are sold. Trainline is an online ticketing company in the UK worth about $2 billion, a little bit more, but investors are worried they could be crushed by these new changes, and as a result, the shares are off more than 25%, Francine.
I didn't even know that, Matt, that actually we had the oldest train
Pretty
lines.
fascinating,
I thought it was
right?
the most expensive. Yeah, I thought it was the most expensive, but I know we also have a good run for our money because of the U.S. trains. We should dig a little deeper into what the most expensive train line across the world is. Now, look at what is ahead today. U.S. Commerce Secretary Gina Raimondo holds a summit to discuss the global semiconductor shortage. We'll, of course, be all over that because it touches all industries and all business. The IMF Managing Director, Kristalina Georgieva, and the ECB President, Christine Lagarde, speak at the Vienna Economic Forum. And then 8:30 a.m. New York time, we'll get the U.S. initial jobless claims. And of course, this could give us a good indication of when the Fed could start thinking about tapering. I love that, Matt. It's kind of like the Lacqua household. We talk and we think, but then it happens.
Well, I mean, I think it's really the most fascinating thing for the broader markets that we had happen yesterday. Of course, we were all obsessed with the crypto moves, but that doesn't really affect as much or as many assets as the Fed talking about tapering. And as a result, I think we're going to see a lot of focus on this over the next days and weeks.
Yeah, because the volatility in crypto assets today a little bit more subdued after that bruising day that left much of the crypto community in shock. Now, key analysts for Bitcoin's roller coaster ride, Elon Musk's complaints about Bitcoin fossil fuel usage, and the PBOC's warning that digital tokens cannot be used for payments. Let's get more from Bloomberg's Danny Berger. Danny, I mean, it doesn't really track anything, right? So it got sold off. It was a crazy day. It got sold off. But then actually Bitcoin lovers went back in and bought some.
Yeah, it's always kind of confusing to me to assign various price targets to Bitcoin because, okay, I guess you can say if a certain amount of people own it, or maybe here's the capacity thing. But I always personally have a hard time wrapping my head around it because, look, there are no fundamentals on this thing. But if you're dealing with this deep sell-off, this was the day, yesterday was the day that for the Bitcoin fans, you prove that you're in it for the long run, that you are hodling, that you are not selling off your Bitcoin. And look, we are still seeing, you know, those levels below 40,000 more or less being sustained today, but some of those losses are easing. Now, what could cause that? What caused the sell-off? I mean, there are probably a variety of factors. It does seem like retail was participating in this because there wasn't a lot of contagion. Of course, there are a lot of leverage players who might have got stopped out too, but we have kind of, you know, the three horsemen of Bitcoin coming out yesterday and saying we're still buying, be it BitTorrence's Justin Sun talking about buying Bitcoin and Ether, Kathy Woods talking to us, seeing it at 500,000. And of course, there's always an Elon Musk tweet saying that Tesla has diamond hands. Now, as to what comes next, of course, everyone's talking about that big psychological $40,000 level. We're flirting with that. And regulatory concern, I keep hearing this now from a lot of the institutional players, both the ones that like Bitcoin and the ones that dislike Bitcoin. So I think that that's going to continue to be a key focus for the cryptocurrency, Matt.
I would point out also Michael Saylor. So maybe it's the four-horse people of Bitcoin, right? Because he said that his companies have bought 111,000 Bitcoins and not sold one single Satoshi. And I would also point out that a lot of people who are pro-crypto are also anti-regulation. For some people, that's kind of the point. Some people like the libertarian avoidance of regulation. The DeFi aspect of it is still pretty strong. So, Danny, great report there on what's going on. Of course, we're going to continue to follow crypto. But right now, I want to take a look at some of the stocks moving in pre-market trading in the U.S. For that, we go back over to Kailey in New York. Kailey?
Well, Matt, I want to talk about a number of stocks that are moving to the downside, one of them being Cisco Systems. It reported earnings after the bell yesterday, and it wasn't so good. The stock is down about 6% in pre-market trading. Now, the revenue forecast was a beat. It's the profitability forecast that missed expectations. The company saying it's facing higher component costs, and that's a problem. Another stock moving lower in pre-market trading is AMC. A lot of those meme stocks that had seen a bit of a resurgence got caught up in that risk-off tone yesterday. AMC fell 10%, snapping an 8-day winning streak. And once again, it's lower by the better part of 3% in early hours. And I would just point out, too, that Delta Airlines is moving lower. We're seeing a number of travel stocks under some pressure with about 4.5 hours to go until the opening bell. That stock down about 2% in pre-market trading, Francine.
Kailey, a lot going on. We'll look at, of course, travel stocks. We'll look at cryptocurrencies. We'll also talk about the Fed. Coming up, cryptos staying under pressure after yesterday's plunge. We'll discuss more on that next. And then a little bit later, we're looking forward to speaking to Michael Strobaek. He's the Credit Suisse Global Chief Investment Officer. I wonder whether he's invested in crypto as well. This is Bloomberg.
We go through soul-searching times like this.
This is, an asset with very weak fundamentals that is going to be subject to a lot of volatility.
I mean, imagine roads with no speed limits, right? I mean, nobody knows if you should drive fast or slow, and so it's super dangerous. And then you have a speed limit, and everybody knows what the rules are, and they can then adjust their behavior. We need that in crypto.
The crypto space is one that's very exciting and interesting to watch. There's a lot of volatility in it. But right now, it's not at a scale, and it doesn't have a reach into the economy that has systemic implications for us.
Our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change.
And those were just some of the reactions to yesterday's crypto roller coaster ride. I want to point out before moving on that we have roads with no speed limits here in Germany, and they are not that dangerous. In fact, they're really exhilarating because people are trained how to drive before they're given driver's licenses, and then we avoid issues. I promised earlier a chart showing kind of what happened, part of what happened with Bitcoin yesterday. And Cathie Wood alluded to it there in her interview with Carol Massar. For those of you listening on Bloomberg Radio, I'll just wrap it up for you by saying, in February, we were trading at $40,000 for a Bitcoin, and Elon Musk announced that Tesla would be accepting the currency for its cars and owned $1.5 billion worth of the crypto on its company books. Then what happened was just now at the middle of May, Elon Musk said, hang on a second, we won't take Bitcoin for Tesla purchases because we've realized all of a sudden, I don't know how he hadn't noticed before, that maybe it's not great for the environment. And as a result, we're now right back where we started when Elon started talking about Bitcoin in a big way. So this is pretty much Elon Musk's involvement here. And if you lop it off, then you're right in the same place that you were before. Let's bring in Bloomberg Intelligence commodity strategist Mike McGlone to talk a little bit about this. Mike, you have probably looked at this more than anybody else at BI. You've really been studying crypto for years now. And you were a trader in the open outcry pits in Chicago. I wonder if you noticed some parallels between the plain vanilla commodities that you traded and the Bitcoin or the crypto commodities that we're watching now.
Oh, yes, Matt. Well, one thing you remember from being in the trading pits is being on a sell side and being, covering customers. You just thrive on volatility. You got to get it right, but you thrive on volatility. And days like yesterday and what we've had recently are just where you have opportunities. You just flush out all the leverage longs. You print down to good levels, like you pointed out. And usually that builds the base for that fundamentally sound bull market, which is what we're seeing right now. So I look over what I see, okay, fundamentals are quite strong, most notably for Bitcoin. Then I look at the Bloomberg Galaxy Crypto Index. It's still up 130% on the year. Yes, it got a little expensive, up 250% on the year. So markets went up too far. They've come back to good support, but fundamentally sound. And I'll leave you on this. What yesterday proved is how significant Bitcoin is. It dropped. Copper dropped 4%. Every asset on the planet dropped. And look, stocks are still down. So to me, that's the key indication here. Bitcoin's in the mainstream, whether they like it or not. The world's going digital, and this is a global digital reserve asset. And I think this is going to just bring out more of the buyers. But you know what? Probably stuck in a range between 30 and 60 for a long time.
But Mike, what's driving it? This is my, I can't really understand or grapple with, it's not really tracking inflation. It's not like, is it just because people like it that they buy it? Or do we, are there any fundamentals tied to any cryptos?
Oh, well, technically fundamental. So we can start with Bitcoin. Declining supply, increase in demand, replacing gold. The world's going digital. Do you want to take that risk that your gold holdings might be replaced by Bitcoin? So it's a classic example of human nature. You have to allocate some to Bitcoin. So I think we're seeing that. And you're definitely seeing that with flows out of gold and into Bitcoin. Now, gold reached good support. It's probably going to continue to appreciate. And then you have the rest of the space. There's Ethereum. Ethereum represents digitalization of finance. FinTech, it's the platform for all the other cryptos. For instance, the most widely traded crypto on the planet, Tether, it's a digital dollar. Dollar dominance is increasing. That's an Ethereum token.
I mean, Mike, you've got to count the fact that an S&P 500 company was dedicating part of its balance sheet to Bitcoin. I mean, if that's not fundamental, the chart I just showed you, I don't know what is.
And they're based in dollars. Tesla's based in dollars. So what about the rest of the world that doesn't have this base reserve currency? Allocating to the reserve asset, that makes sense. And I like that chart you showed, Matt, because it shows Bitcoin was between 30 and 40,000 before Tesla. It got way too expensive. It's about 60. Now it's back at that base. What does that mean? It's a bull market. The trend's still higher.
Right, but Mike, I mean, Elon Musk then turns around and says, guys, it's not green enough, and we all knew it, and it falls off a cliff. Is there something that will replace it that is more green?
Well, that's one thing that's happened in Ethereum. Ethereum's switching to what's called proof of stake, which is more green. And it's also, but it's not going to be a digital reserve asset like Bitcoin. So that's coming into space. But one thing that Elon Musk didn't point out is it's the harnessing of energy that humankind has really done to advance. And that's what is the strength of Bitcoin. It uses a lot of energy. It's that source of energy that matters. And all that energy is really going renewable, because the thing about Bitcoin is it's really favorable to that intermittent source of energy you get from renewables, i.e. solar, and actually very remote sources of energy like hydro.
Mike, I was talking to Matt Hogan, he's CIO of BitWise Asset Management yesterday, and he said yesterday's price action was actually proof that institutional investors are involved and that it was retail panic selling and institutions buying the dip. Do you agree with that?
Oh, absolutely. There's nothing like people getting stopped out of their leveraged longs, and to me, that's what happened. And being an ex-speculator, an ex-trader, I have very little sympathy for speculators. Thank you. But they also provide the liquidity. And the key thing to note is right before we had that flush, 60-day volatility in Bitcoin reached a new low for the year. And I think that's what's going to happen. It's going to continue to go down as the market stabilizes, becomes more mature, realize we're probably building a good base of support. We probably put a good resistance, and we'll just kind of knock around an inch higher. I think that's what's going to happen to Bitcoin. Then there's the rest of the space. Ethereum got a little bit too expensive around 5,000, but it's getting kind of good support around 2,000.
Mike, quickly, you're, of course, a commodity strategist. I want to talk about another commodity, oil. The president of Iran says a broad outline has been reached to end oil sanctions, and we are seeing Brent right around session lows, down about 1.5%. What is the real implication of that for the market?
Oil has probably peaked for the year around 70. It's been going down since 2008. It's a classic bear market. It got near the upper end of the range. And what about COVID made oil bullish? Yes, prices got negative, but now we're up the upper end of the range. The world has changed, and Iran is just one example of this massive supply in the space, more and more supply. And one thing about this supply, it's on the back of rapidly advancing technology. The rest of the world is following the U.S. Total consumption of U.S. liquid fuels is the same as it was 20 years ago, and that's before EVs. Now, EVs are kicking in. We can produce oil easily. We can replace it with technology, and it's just a matter of time. But then the opposite side of that is copper. Copper's probably bottoming around 10,000, and resource nationalism is picking in. So what I see for the future of the commodities, forget the super cycle. It's happening in Bitcoin. Metals continue to go higher. Petroleum replaced by technology. Expect petroleum prices to inch lower.
Mike, thanks so much. We have to leave it there, but actually we would speak to you for another 3 hours. Our Bloomberg Intelligence commodity strategist, Mike McGlone, joining us. Now, coming up, it's the fourth day of the Bloomberg Business Week Summit. Today, we'll hear from the U.S. Infectious Diseases Chief Anthony Fauci and EU Commissioner Paolo Gentiloni. Part of that interview a little bit later this hour as well. This is Bloomberg. This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now let's get straight to the Bloomberg. First for news, and there are media reports that Israel and Hamas are near a possible ceasefire deal. That's after President Biden urged Israeli Prime Minister Benjamin Netanyahu to wind down the conflict. Now, according to the New York Times, a deal would unfold in stages. Israel would quit attacking the Hamas infrastructure, while the Palestinian militants would halt rocket attacks. Now, the Democratic-controlled House has voted to create a commission to investigate the January 6th insurrection at the Capitol. 35 Republicans broke ranks with their leadership to support the probe, but the legislation's fate in the Senate is uncertain. The Republican leader, Mitch McConnell, is opposed. Democrats would need 10 Republican senators to vote in favor of the investigation. China has released the first images from its Mars probe. Well, the spacecraft landed on the red planet Saturday. It's carrying a rover which will explore the surface near the landing site. China is the second country after the U.S. to send a rover to Mars. And shares of Oatly begin trading today. The Swedish vegan food and drink maker raised more than $1.4 billion in an IPO. Shares were sold at the top of a marketed range. The listing gives Oatly a market value of about $10 billion. I have to say, there's always a carton lying around at home. Not mine, but I couldn't believe it when it was worth $10 billion. It's quite extraordinary, and I guess that's the way things are going in terms of consumer taste.
What is that? That's oat milk? that people drink instead of cow milk? I guess it's for people who are lactose intolerant.
The healthier option, apparently. I think it's just a trend towards vitamins and being better.
Yeah. The question is this going to be like another Beyond Meat? I guess we'll find out.
I mean,
I've tried almond milk. It's pretty good, but I'm not sure. Well, I guess oat milk sounds like it would be good. I'll try it.
Try it. We'll speak later to the Oatly Chief Executive, Tori Pedersen. That's at 11:30 a.m. in New York, 4:30 p.m. in London. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kailey Leinz in New York. Now, there's quite a lot going on in the markets, Matt. We spend about 60% of our time looking at cryptocurrencies and the rest, I guess, thinking about what the Fed is thinking about tapering.
Yeah, I actually had some people complaining on Twitter that we were too focused on cryptos yesterday. And the thing is, when you have an asset that is all of a sudden worth $1.2 trillion and then it loses in a 24-hour session $500 billion of market cap, you can't look away from that, right? But definitely, I think, as I said at the top of the program, the Fed talking about tapering affects much more. I mean, the U.S. stock market is a $50 trillion market cap, and then you got to talk about all the FX and bonds in the world. It's just huge.
Right. And Matt, on crypto, it's also always our most read story. So we have the data. People are interested. Kailey, what else are we seeing in the markets?
Well, what I'm really looking for in the markets is any other asset that can move $10,000 in a single session. I'm going to use the power of the Bloomberg terminal, see if I can find that, because I'm not sure there is one out there. That's why we had so much attention on crypto yesterday. But as for what's going on in the broader market, of course, it does have to consider the Fed at least whispering about talking about tapering. And right now, it's interesting. We're actually around session lows, both in Europe and in the futures market here in the U.S. The Stock 600 was higher as much as 0.5% earlier, now just fractionally lower. And S&P 500 futures are pointing to a softer open in about 4 hours' time, down about 24 points. In the bond market, we did see yields moving up on the back of those Fed minutes yesterday, but as traders try and digest exactly when that taper talk is going to begin, yields are moving down just about a basis point to 1.65%. And then, of course, Matt, I have to mention crypto. I know that the Fed is important, but this is important too. Bitcoin still below $40,000, but well off the $30,000 it hit at one point yesterday. And with that slight recovery we're seeing in Bitcoin, we are seeing a number of crypto-related stocks on the move in pre-market trading. Interestingly, though, off of the highs of the pre-market session. Riot Blockchain is now flat, actually, in early hours. Coinbase is up just 0.5%. It, of course, was dealing with outages amid the turmoil yesterday. Tesla is also lower. And the ARK Innovation ETF, this is an interesting one. Cathie Wood, of course, a crypto bull and a Tesla bull. She used the opportunity to buy the dip yesterday in Coinbase and Tesla. Those were added to some of her exchange-traded funds, but one of them, that ARK Innovation ETF, is down about 0.8% before the bell, Matt.
Yeah, well, listen, I think it's interesting that for a while Bitcoin was talked about in some corners of the market as a hedge, and that didn't really turn out very well. We should point out that gold, just a couple months ago, dropped down below 1,700, and now we're looking at gold at 1,870 at troy ounce. So that might be an interesting hedge. I got a chart here that my old friend Hillary put together, my erstwhile television producer. It shows correlations, and I'm often pretty dubious of correlations, but what this shows is that bonds haven't been this correlated with stocks since 1999, which, Hillary was like 7 in 1999. So it's been a long time for especially those millennials and Gen Z kids out there since we've seen this. When I was a kid, we talked about a 60-40 portfolio. That seems pretty useless right now because basically, Francine, bonds just have completely lost the ability to hedge.
Yeah, I don't know why. I mean, your friend is also called the Queen of Charts. That's how Hillary's referred to, Matt. So let's just get her title straight. She does most of our charts, and she does a great job day in, day out. So to talk about your wonderful charts, Dan Curtis, also a shout out to him. We're joined by Michael Strobek. He's a Global Chief Investment Officer at Credit Suisse. Michael, thank you for joining us. I don't know whether I should start talking to you about crypto or whether we start talking about bonds and equities. What do you think is more interesting actually in the markets right now? What is the question you get the most by clients?
The number one question, Francine, that we get is, on the one hand, what am I going to do with my equity allocation? Many have missed this powerful rally, and is inflation and interest rates going to be a problem if I jump on that train now? And I'd say to all that, you've got to position yourself probably short-term for a dip in equities. We've come tremendously far on this rally since the lows in March last year. And we are going into what we call a fog of macro data that indeed can lead to short-term surprises on the inflation front and maybe a bit of weakness on the growth front. And that's sort of a mix that will trigger some uncertainty and potentially a small correction in equities. That's what I worry about much more than what cryptos are doing, to be honest.
Okay, so you worry about that, but are you confident that at least when it comes to inflation, that the central banks have this and that they will telegraph it before doing anything that could lead to a market meltdown?
Yeah, I think they have it. I think, honestly, they have, of course, as well, a strong interest in market steering through a phase of uncertainty about where inflation really will sit as we come out of this pandemic. And I don't think that they will be in urge to react very fast just because of market volatility or gyrations. That's a good actually way of finding a new equilibrium, maybe a more sustainable path. I think it's still going to be upwards in equities, but I do think that we need a bit of a break, a pause, a wash out, maybe a rotation so that people come off some of the trades that they've taken because of the pandemic and they start looking forward as we move into a more normal world than what we've had in the last months.
But right now you think there is reason, Michael, to take some profits off of the table if you have participated in the equity rally?
I absolutely think so, yes. I think these summer months, in the next maybe 3, 4, 5 weeks are going to be quite critical for the next phase of this market in terms of its upward move. We need to digest that the pandemic is behind us. Certainly in economic terms, it's really behind us. All indicators are pointing to one of the sharpest recoveries in economic history, world trade at all-time high, people going back cruising, all kinds of stuff. Everybody wants to get out, and we all know that. But we also know that this is, of course, not either a new normal. And I think the next 4 or 5 weeks will show how much have we overshot in the short term, and how much is inflation a problem because of the stimulus we've gotten, central bank intervention, and the shortages that have taken place in the global economy, because not everything has worked truly well. We still have shortages here and there. Maybe that puts points on pressure. And lastly, commodities have been on the roar. They may press on headline inflation. And I just think that it's wise to just take some profit off if you participate in this. Don't chase this rally. Don't be overweight right now. Certainly in some of those sort of high beta sectors that we've seen rally so sharply, and prepare for a rotation. And I think that rotation is going to swing into value, to European stocks, and to stuff that's just really very attractively valued.
Well, and that's tactical, Michael. But I wonder what it means if a few months down the road, towards the end of the year, the Fed starts talking about tapering, or even actually tapering indeed. How does that then affect this equity rally?
Well, look, I think if it's well flagged and signaled, the market can digest it. Markets, as we all know, hate uncertainties and surprises, and Fed policy, of course, is the number one driver of, if you will, stopping a bull market or at least slowing it down. I think they know this extremely well too, and I think they'll be very smart and wise about how they start talking about it. And they'll look at unemployment levels in general to see how fast should they go. And if they see those come down, we will go into a tapering towards the end of this year and early next year.
Michael, if you're pulling back on risk, taking some profit, do you want to be sitting maybe a little bit more in cash? Is there a better place to put your money?
Yeah, I would go to cash. I would certainly not go to government bonds as you just discussed, because of their very poor hedging ability in any portfolio at this stage at these levels. And just be ready for the next phase of an equity upward move that is going to come more from, as I said, value from Europe, from perhaps more interesting cyclical European markets, like in our case, Spanish equities we actually have begun liking more, UK, and also financials we think are set, especially in Europe, for a good next move upwards.
Michael, thank you so much. As always, Michael Strobek there, Global Chief Investment Officer at Credit Suisse. Now, coming up, addressing the shortage, the largest chip manufacturers and U.S. automakers gather virtually today for a White House summit. So we'll talk about chips and we'll talk about industries affected. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, Ford CEO Jim Farley. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz in New York with Francine Lacqua in London and Matt Miller in Berlin. Well, the White House is holding a summit today to try to address the semiconductor shortages that have rocked global supply chains. U.S. Commerce Secretary Gina Raimondo has invited some of the world's key players, including Amazon, Samsung, and TSMC, along with the major automakers. Joining us now is William Gale, Lead Portfolio Manager for Technology at BlueBox Asset Management. William, what can the U.S. government really do to help the situation?
Well, I think in the short run, probably not very much, to be honest. I mean, from the American point of view, they could put a bit of pressure maybe on suppliers to favor American manufacturers, but other countries will be doing the same. And in the end, they're probably mainly governed by contractual obligations for valuable chips anyway. So in the long run, the US could encourage the creation of more factories, fabs for semiconductors on US soil, or just build up capacity. But it takes at least a couple of years to build new capacity for semiconductors. So that's not going to be an easy fix either.
But William, is this not like it's like the space race? Like, it doesn't actually matter how much. This is for national security. And what will, is this where we're heading?
Well, certainly an element of that. I think the world has woken up suddenly to how much of the leading edge capacity, the most sophisticated chips, are being built in Taiwan, very close to China, potentially hostile, and in Asia in general, and that a lot of that manufacturing has moved offshore from Western countries, and some of that needs to come back. I mean, there is capacity in the US, there is leading edge or near leading edge capacity in the US, but I think there's a view now that needs to be built up quite a bit, and if that takes quite a few $1 billion, that's just the cost of doing it.
Is there an investment opportunity as we reshuffle, as we move supply chains around the world, William, as governments get involved to try and make sure something like this doesn't happen again? Can you make money, or is it too late?
Oh, no, I definitely can. So if what's going on here is that capacity is being added in new locations, pretty much whatever the cost for security purposes, then more money will be spent on chip capacity than before. There will be duplications, there will be inefficiencies. And therefore, the companies that are making the equipment for that capacity will do very well out of it, because they might sell twice as many machines as they did before. So there's certainly considerable scope to make money out of the companies that make the machines that make the semiconductors. They're up very strongly in recent months, but my guess is they'll go on going up. Those orders are going to be extremely strong for at least the next year.
Are we going to see then the capacity brought home to the US, to the UK, to Europe, you know, the developed world, which has lost out on this kind of manufacturing capability, but invented it? Is that going to move? Is that going to move back?
So some of it clearly is. So, I mean, TSMC is, so Taiwan Semiconductor Manufacturing, it's the lead manufacturer of outsourced semiconductors, so you can pay it to make your chips right at the leading edge. They have talked about plans to build not just one fab in the US now, but a group of these factories for making semiconductors. Europe seems to be having less luck in attracting that capacity back. So I suspect the US has got more spending power and will probably splurge more subsidies on it. So that's probably one reason. But in the end, you need to have a cluster of these factories. Each of them is absolutely enormous. But just one on its own is not particularly economic. So you need to have several in the same place.
William, you talked about the investment opportunities on the supply side, the companies, you know, producing these chips. What about the demand side, the companies that need them? How do you handicap this shortage issue for some of these tech players, for example?
Yeah, so I think the larger the buyer relative to the seller, the more power the buyer has to actually get what they need. Contractual obligations will help. So if you need very expensive, very sophisticated chips, you've probably got a contractual right to have a significant quantity of those in any given period. But actually the vulnerability often is with the cheaper chips, the more standard ones, because there are thousands of buyers and there's probably much less contract in place. You sort of buy off the shelf as it's produced. And even the most expensive machines use lots of very cheap chips as well as expensive chips. So it's a problem which could be pretty widespread. I think it's going to be quite difficult to pick out the buyers that are going to lose most or least, basically. It's easier to pick out the chip companies that are going to do better. Those that have got their own capacity will do better. Those companies that are making the equipment will do better.
William, thanks so much. William de Gale there, a lead portfolio manager for technology at BlueBox Asset Management. Now, coming up, the EU Commissioner, Paolo Gentiloni, feeling all in all optimistic about the recovery. Part of that interview is coming up shortly. This is Bloomberg.
We have, from one side, the vaccination campaign that is growing after initial delays now with good speed and with very strong coordination among member states in the European Union. And second, of course, that we factored in for the first time in this forecast the impact of Next Generation EU. And this is the reason why we estimate to have growth of 4.2 and 4.4% in this year and next year. And these are rather good figures, as you know, for the European economy, which is not an economy accustomed to very, very high level of growth. So a little bit of more optimism, but of course we still have a certain amount of uncertainty connected to variants of the virus and to the nature of the recovery.
Well, that was the EU Commissioner, Paolo Gentiloni. You can catch that full interview as part of the Bloomberg Business Week starting at 10 a.m. in New York, 3 p.m. in London. We talked, of course, about the vaccination efforts in Europe, the disbursements of the EU Recovery Fund, the delay in certain cases of that being handed out to member states, and, of course, taxation. That's probably the big one, reforming the taxation system worldwide. Now, we're joined by Tom Keene, co-anchor of Bloomberg Surveillance. Tom, I know you're focused on the S&P 500 today, but overall, look, it's pretty incredible that the Fed is getting, not as much much love as in previous days because of all the focus on crypto?
Well, there's a lot of mystery out there. There's the Bitcoin, what we saw yesterday with Bitcoin, and of course the recovery we see today to a 40,000 print moments ago. But we are watching the markets, and what's amazing, Francine, in the new interior volatility, we've gone nowhere. The chart's real simple, and it just shows a simple 2% pullback that we've seen in the Dow. Here, the Standard & Poor's 500, and granted, the NASDAQ 100 with that tech weighting is a negative 6%, negative 5.6%, whatever, but it's in a significant stasis. It's a steadiness here when everything's considered back another number of weeks. But then you got to get through the day, Francine, and getting through the day here will be sport.
It certainly will be sports. I mean, you know, what we heard from the Fed yesterday was it really the first indication, Tom, that, you know, some Fed officials had actually thought or, you know, had started having a serious conversation about pulling back monetary help. And is the key finding out who they are?
Less so. I don't play that parlor game. I really don't. I look at what they say, the consistent theme, and when you see a change amid a given person, particularly Vice Chairman Claret, I would really focus on as being a key theorist there. Maybe Charles Evans of Chicago as well. But when everything is said and done, Francine, the Fed's going to wait and see what the news is. They're starting to see news. There has been a shift, Francine, in the last 2 days. The real yields are really starting to come in. That's been a sort of a backstory beneath Bitcoin and the losses I've taken on the Doge.
On Bitcoin? You're fully invested in Bitcoin? Yeah, the 12-year-old still day trading on the sofa. Tom,
on the sofa, yes.
Tom Keene, co-anchor of Bloomberg Surveillance. As Tom says, we have to get through the day because there's quite a lot going on. Kailey, you're watching crypto.
I'm watching crypto. And when I say I'm watching crypto, Francine, what I really mean is I'm going to have one eye on a tick-by-tick chart of Bitcoin and the other eye on Elon Musk's Twitter feed. Because are we going to get another diamond hands tweet, maybe a rocket ship, maybe an up or down arrow? Who knows? But whatever he says, as we have seen over the last couple of weeks, does have the potential to move this market. So you have to pay attention to both things at the same time, Matt.
Yeah, well, it'll be interesting to see if he still has the power to move this market the way he definitely has over the last couple of months. I'm watching Major League Baseball to see if there'll be another no-hitter, because what we are seeing this season is truly amazing. There's a picture of Corey Kluber there after he threw a no-hitter yesterday for the Yankees. Spencer Turnbull threw a no-hitter for the Tigers the day before that. We've had now seven no-hitters, if you count a 7-inning game, which I count that as a no-hitter. And for European viewers who are watching, the problem here is that over the years, pitchers have gotten so good that the batters just can't get any hits, and it's bad for Major League Baseball. But it's fascinating, obviously, if you have a love of the game.
Yeah, and Matt, for also our European viewers, if they need one-on-one pointers about the rules, they can reach out to you directly. What I'm watching is really data indicating that the mRNA vaccines mean that there's a less chance of transmission. So it does seem, once again, that not all vaccines are created equal. Coming up in the next hour, Russ Kostridge, BlackRock Global Allocation Fund Portfolio Manager. This is Bloomberg.